Adjusting entries are usually made on the last day of an accounting period so that a company's financial statement comply with the accrual method of accounting. We have 5 types of adjusting entries, and we divided these 5 types into 2 categories based on a criteria. The first category is something recorded. That means something has been recorded in the general ledger but amount to be moved or split between 2 financial years. Prepaid expenses, unearned revenue, and estimates are the 3 types in this category. And the second category is nothing recorded. That means if adjusting entry deals with nothing, then we have a case that nothing is recorded in the general ledger, but we are certain that revenue or expenses are accrued and the entry to be accounted in the current year. Accrued expenses and accrued revenue are the 2 types in this category. Let's look at a trial balance. This is an unadjusted trial balance. That means the amount shown in this trial balance is not adjusted. We have to make some adjusting entry to make this adjusted trial balance. So there we have some adjustments. We can go through each and every adjustment to understand what is actually adjusting entries. Prepaid expenses. Prepaid expenses are future expenses that we are paid in advance. In case of accrual accounting, the expenses must be recorded as they are incurred. Newspaper subscription paid for 6,000 for 1 year starting 1st November 2001. See the period. The 6,000 paid for 2 financial years. So we have to split this 2,000 into 2 financial years. First of all, we divide 6,000 by 12 to get the monthly allocation. And we get 500 for each month. In current financial year, that means 2001, we have to allocate only 1,000 as expenses and the balance 5,000 should be allocated to next financial year. In case of cash accounting, we are posting this journal entry, debiting subscription expense for 6,000 and crediting cash for 6,000. But in case of accrual accounting, we have to make 2 adjusting entries. That is, debiting prepayment expense for 6,000 and crediting cash for 6,000 when the amount is paid. Actually, the prepayment expense is an asset account which goes to balance sheet. At the end of the financial year, we have to make another adjusting entry to complete this entry. Debiting 1,000 for subscription expense, that is the actual incurred expense in the current financial year, and crediting prepayment expense for 1,000 to reduce the prepayment expense account to 5,000. Unearned revenue or deferred revenue. The cash is received in advance, but the revenue is not earned. The work will take place next year. The revenue should be moved to next year as we should not overstate this year revenue. Deferred revenue is a liability because if you fail to provide the service, you will have to pay money back. Let's try an example. Service revenue received 6,000 in advance for work to be completed in October 2001 to September 2002. We have to split this 6,000 into 2 financial year, just like we did in prepayment expenses. First of all, we have to find the monthly allocation. In this case, the period is starting from October, so we have 3 months in this financial year. In cash basis of accounting, we post this journal entry, debiting cash for 12,000 and crediting revenue for 12,000. But in case of accrual accounting, we are posting adjusting entries. That is, debiting cash for 12,000 and crediting unearned revenue for 12,000 at the time of receipt. And for December 31st, we have to make an extra adjusting entry to complete this procedure. Debiting unearned revenue for 1,500 and crediting revenue for 1,500. The 1,500 is the actual revenue that is incurred in the current year. Estimates. Depreciation is an estimate. It allocates the amount paid for fixed asset to current expenses in those periods expected to benefit from the use of an asset. Let's try an example. Depreciated furniture and fixtures at 5% per annual basis. At the end of the financial year, we have to depreciate 5% on the net value of fixed asset. In this case, furniture and fixtures. There we have 12,000 in furniture and fixtures So finding the 5% on 12,000, that is 600. There we have two methods of accounting in depreciation. Depreciation debiting for 600 and furniture and fixtures crediting for 600. In this case, the asset account is directly credited. But we have another method of accounting. In that case, we are debiting 600 expense for depreciation and crediting accumulated depreciation for 600. Accumulated depreciation is a contra asset account which decreases the asset value from the balance sheet, and after posting this entry, we will reduce the accumulated depreciation amount from the gross value of fixed asset, and the fixed asset section will be like this: furniture and fixtures gross amount 12,000 and accumulated depreciation for 600. The net value of furniture and fixtures is $11,400. Estimates bad debts. We have second type of estimate, that is bad debt. What is bad debt? Sometimes the debtors will not pay a certain amount of money, so we have to write off some of the debtors amount from the balance sheet. Let's try an example. Provision for bad debts estimated 10% on debtors. At the end of the financial year, we have to provide a provision for bad debts on debtors at the rate of 10%. So here we have 25,000 at the end of the financial year, and we are finding the 10%, that is 2,500. In first case, we are making this journal entry, debiting bad debts for 2,500 and crediting debtors for 2,500. As we did earlier, we can make an adjustment entry, debiting bad debts for 2,500 and crediting allowance for doubtful debts. Allowance for doubtful debts is an contra asset account which reduces the balance of debtors from the balance sheet. And the debtors column from the balance sheet will be like this: gross amount of debtors 25,000 and allowance for doubtful 2,500. The net value of debtors will be 22,500. Now we are looking for cases where nothing has been recorded, yet we are certain that expenses did occur that need to be accounted in the current period. Invoice for audit charges will receive in April 2002 for 3,500. The audit of the firm performed by external auditors, but they haven't invoiced yet. But the expense occurred in the current year. You are certain that the invoice will receive in the future. So we have to set some money aside for this. We don't want to understate current period expenses. So in this case, at the end of the financial year, we have to record the 3,500 expenses in the current year. In this case, no entry is already made. But in previous cases, there we have two journal entries. The adjusting entry for accrued expenses is debiting audit charges for 3,500 and crediting expense provisions for 3,500. Expense provision is a liability account. We have to pay 3,500 later. Service revenue not yet received because invoice billed to customer on February 2002, $9,250. In this case, we have already provided the service to the customer, but we haven't invoiced the bill to the customer until February 2002. But we are sure that it is a revenue. It is occurred in the current financial year. So we have to record this in the current year. At the end of the financial year, we have to record 9,250 as a revenue. Previously, we haven't made any entry, but the adjusting entry is revenue receivable 9,250 and crediting service revenue 9,250. Revenue receivable is an asset account. That means we will get the money after February 2002. Now let's go through the trial balance. This is an unadjusted trial balance that we have already seen in the first slide. Now we made some adjustments and we are getting adjusted trial balance.